Just overnight with the acquisition of Aphria?
Well, I mean, the key thing here is we were buyers on Aphria prior to the merger, and we think the combined company, when putting Tilray through the Aphria infrastructure, creates an even stronger proposition. So, I mean, if we had to highlight three things specifically that support the buy, number one, sales growth outlook, very attractive. So on our numbers from pro forma 21 into 2023, we see the company growing at an average of 33% a year. It's the market share leader in Canada, where industry trends are also set to accelerate after disappointing the last couple of years. And then in Europe, the combined company for us is ticking all the boxes with regard to what will be needed to succeed. And so, although the European market remains very small right now, in our view, it should not be overlooked and has the potential to be significant. Then you've got attractive optionality in US THC.
Sure.
Legislative developments there may allow entry sooner rather than later. And then it's valuation. So, I mean, it's trading on a next 12-month EV to sales of 8.2. Our implied price target is 13.2. We think more than justified when you consider closest peers, Kronos and Canopy, on 15.1 and 12.7 respectively.
So it sounds to me, based on the way you're describing, the way you described it in the note, that the European market, through which Tilray has an advantage potentially because of its link up with Novartis in terms of the pharma side of the business, and then the upside from the THC market in the U.S., those are sort of just upside options. The core here is that the combined company has the strength in 1.0 products and 2.0 products, so the flower as well as the vapes and sort of the flower derivative products.
Exactly, and Canadian companies, Canadian industries had a lot of press, but I think the people there are confusing kind of poor business performance with poor underlying fundamentals, and I don't think that's the case. I think poor delivery to date has largely been a function of poorly run businesses in Canada. Underlying fundamentals and underlying outlook in Canada remain attractive, and to your point there, Tilray is very well placed to be at the forefront of this, being the market share leader right now.
In the downside scenarios in your note, you mentioned that if there's a return to strength of the peers, that could hinder Tilray's grip on the market in terms of market share. And so is part of the call that just the other players are weak and will remain weak at this point, that they somehow, for whatever reason, are not as well equipped to compete in this environment?
Yeah, I mean, this goes back to while there's been poorly run businesses in Canada, the exception to that, I'd say, was legacy Aphria, which is now combined Tilray. The reason it's had such strong market share performance is actually when it entered the market with legalization, it really took time to understand the consumer, introduce targeted brands at specific price points, specific consumer segments. A lot of its peers, such as Canopy, Aurora, they didn't really do that. And as a result, you've seen their market share under a lot of pressure over the last 18 months, while Aphria is the exception in terms of it's been able to maintain share where it is. And I think now adding the Tilray 2.0 portfolio into that existing strong brand equity, the outlook for further market share progression is strong.